Bitcoin has set a new lower high on the daily time frame as we come up to our expected range for BTC. Guys, welcome back to the channel. My name is Nick, and today we are talking and discussing about the technical analysis of Bitcoin, where I think the price action is heading next and all that wonderful stuff. As I get into today's video, smash that like button, guys. I really do appreciate that. Let's see if we can hit 500 likes on today's video. Really do appreciate that. If you happen to be new to the channel, subscribe and stay up to date with all the content that we do here at Cheeky Crypto. Guys, let's jump right down into the charts and take a look at what's going on with BTC. Okay guys, we're going to kick things off here with BTC paired up with USDT. We're on the 1-day Binance chart, and following on from the previous video, our targeted range was $69,709 to $72,167. We rallied up, we hit a high of $71,979, and we've seen a couple of red candles being printed here as we kind of get rejected from this area. This area was the area of resistance because it was a 1 to 1.236 fib scale under the WXY structure. Elliott wave theory, again, predicting out where the thing is heading, well, where Bitcoin is heading. So for the most part, everything's kind of heading out in this direction here. We've obviously topped out here. Now, the bulls will have you believe that we can still rally on up, and sure, there's always a possibility, an outlier, that is something that we need to kind of think about and something that is possible. However, Elliott wave theory tells us that we are likely to see reversals here. Okay, so this means that we are likely to see now a bit of a pull to the downside. I'm still targeting out that 200-day exponential moving average. You can see here we have lower lows on our daily time frame. Okay, we have lower highs on our daily time frame, and if we continue this journey, you can see it comes down towards our 200-day exponential moving average. Really, we're talking 53,711 to 56,485. Of course, this is a daily time frame, so expect that to take a couple of weeks or so before we actually kind of see that one come out. There's that potential coming down a little bit lower to 51,453 to 53,676. However, I think this is a little bit less likely, but I'll leave it there just for reference. It's possible that we wick down, we liquidate all those positions that are sitting just a little bit lower here, and then we kind of rally back up. In fact, let's throw on the VPVR so you can see visually what we're talking about. You can see here in this upper area there's a lack of volume, as you can kind of see, and you can see down here just around this 200-day exponential moving average, just a little bit lower, there is a pocket of volume really coming in at 50,600 to 53,000. Now the VPVR is showing you historical volume. It's not showing you like where buy orders are or anything like that. It's just showing you that history tells us that this area there was a lot of buying and selling pressure, and as such we would expect to see the same again. That's kind of what the VPVR is kind of showing us. There's obviously areas where there's just non-existent volume, right? And that's why we had these candles here going to the upside on the 26th of February, 27th and 28th of February. These candles represent a lack of liquidity, lack of buying, lack of selling in this range. And well, these are fair value gaps on smart money concepts and will also align nicely with that 200-day exponential moving average. Okay, but I've been through these things many times before. Ultimately, what I'm looking for here is a big 3-wave correction to come down into this range. It's still going to mean that we are in this continuation pattern and that we are continued to kind of go sideways in this range in market for a little bit longer. That in itself isn't bearish, by the way. Okay, a lot of people will say, oh, you're just being bearish on the market. We were actually looking for a break to the upside. Why are you always bearish, right? And I'm not really talking about being bullish or talking about being bearish. It's not bulls versus bears, really. I mean, you can see the thumbnails recently. Essentially, really what I'm talking about here is having the probability on your side, right? The higher probability right now is that we actually correct down rather than rally up. Now, it's still possible possible that we rally up because this is crypto and anything is possible. But we also need to kind of factor in that it's highly likely or more likely that we go down rather than go up. And that isn't bearish because the pattern in which is forming is still actually rather bullish, right? We're still bullish on these macro timeframes. All I'm saying is we need a little bit more time to go sideways before we go up, right? And so when we take a look at this, we can see how this would play out. Now, it's possible that we continue to rally, of course it is, but I think we have to have at least a mini correction down to the 50 simple moving average or 50 exponential moving averages, which are coming in at around 64,500 approximately, and 65,000 on the 50 simple moving average, right? So we are looking for a bit of a correction here before we potentially even get the idea of another run to the upside. Now, if we throw on smart money concepts, you can see all of the fair value gaps that I was talking about, how they haven't yet been filled out. Now, these represent areas in price where liquidity was missing. And what we mean by that is that large buy orders came in, or a large amount of demand came in this case, but there wasn't a sufficient amount of sellers. That is an illiquid market. A liquid market is when buyers and sellers agree and price is stable, right? So it's actually the volatility that we see in price of crypto is due to illiquidity, right? So basically when a market is illiquid, we can see here that we have these fair value gaps. Price surges to the upside in this case, but it also goes in the opposite direction as well, right? When there's a high amount of selling pressure, price drops rapidly because there's no one to soak up that supply that enters the market. Basically, and the case that we see here with Bitcoin, with all these green areas on the chart, these are fair value gaps because large buy orders came in, there wasn't enough sellers, so the price had to go to find the sellers, right? And price goes higher in doing so. Now, with fair value gaps, there is a tendency for them to get filled out. Basically, the market likes to put liquidity where liquidity was missing. That is a fundamental element to smart money concepts. Okay, now with this, there's no guarantee that, of course, that we move down and we fill out all those fair value gaps that you see there. However, there's a high probability that that is the case. Not only does Elliott wave theory tell us that we should be heading down towards our 200-day exponential moving average, the 200-day moving exponential average, of course, is our bullish trend line. So we're above that, we're bullish, right? So moving down to it isn't bearish in itself. Smart money concept says there's a lot of fair value gaps here, so we should probably look to put liquidity back where liquidity was missing. And so we have quite a few confirmations that the market is looking for this move to the downside, outside of your sentiment that you might find on Twitter, right? Because of course, Twitter sentiment is something very, very different to what the technical analysis is going to tell you, what the herd mentality is doing essentially. Now, if we come into our stochastic RSIs, you can see here that this is overbought and we have had a negative cross on the stochastic RSI on the 20th of May. Okay, we can see here that the stochastic RSI is heading down from its overbought area, showing that momentum has shifted. Momentum has shifted lower than the average of the stochastic as well, indicating that we are likely to see a continuation of this shift to the downside from our overbought looking to go down to oversold. No guarantees, because there is no guarantees in crypto, but the probability is here that we still have slippage to the downside. So momentum indicators like the stochastic RSI is aligned to Elliott wave theory, indicating a move to the downside, and is aligned to smart money concepts, telling us that there's a move to the downside. What else can we look at to help us understand this? Well, what about divergence? Well, the RSI, the relative strength index, is approaching that overbought area as well. And so this is also an indication that we might start to see a little bit of turbulence here. But the relative strength index is a trend-based momentum indicator. It means it works best when there's a trend. And in the sideways movement that Bitcoin has been in for the last kind of couple of months, has actually an indication that maybe things are not in a trend at the moment, and maybe the relative strength index is not the best momentum indicator to be using. Nonetheless, we can see it's moved up quite a bit over the last kind of month or so. So it's going to be interesting to see where this goes next. There's no divergences being shown here, so we're not finding any bullish divergences, hidden bearish divergences, nothing like that. So for the most part, we are just kind of bobbing along nicely for Bitcoin. Take this off, throw the volume in, bring the volume and the price action aligned. You can see this move to the upside here for the Bitcoin price. And at the same time as that, you can also see that volume has been decreasing. This is showing you that there is a divergence in the volume pushing the price of Bitcoin higher versus where we would normally expect it to see, right? For example, if we have a bullish break to the upside, then you would expect the volume to also increase at the same time. Here, of course, we do not see that. We see a push to the upside back to this previous area where we set a new lower high at the same time as volume dropping down. So again, another indication that things are not as bullish as maybe Twitter sentiment wants you to believe, or X sentiment wants you to believe. We could take a look at the MACD, but again, the MACD unfortunately is just a laggy indicator, only showing you what's already happened. So it's printing green at the minute. And of course, it's printing green because we've moved up a bit on the daily chart. So again, I don't use the MACD. I reference it from time to time just for the comments sake in the comments down below. Of course, you can have a laugh down there if you want. So for the most part on our daily time frame, we hit our upper target. This is where I said we should be thinking about short positions, put in a stop loss into new all-time highs, and target out at least the 50 EMA, 50 SMA. Good risk-reward ratio had we entered this one. So again, that's where I'm looking for. If I wanted to go long, where's the next long opportunity? The next long opportunity, in my opinion, is to find support on the 50 simple moving average, tight stop loss lower than the 50 exponential, and then we'd have to target out a new all-time high at that point. So again, good risk-reward ratio around 4.27. And of course, if I am to be using leverage-based trades, I'm going to be using BitGet or Blowfin. Both are fantastic platforms, my go-to platforms when it comes to leverage-based trading. If you haven't yet signed up to either of those, what are you waiting for? The link is in the description down below. I don't think you'll regret it. If you use those links, you are eligible for various different bonuses and rewards depending on where you live around the world, and various other terms and conditions, which of course can be found on their website. Let's roll this up into a weekly time frame. Okay, so we hit our upper target ranges, and we are of course still looking for these lows. And you'll note that we are still incredibly bullish on our weekly time frame. This is looking very, very healthy here, right? We're above the 200 week EMA, we're above the 50 week SMA, the 50-week EMA. Everything's actually looking pretty good. We are still looking for corrections here to hopefully try to find some support on our 50 exponential before we get that next kind of run upwards, where I do see this thing potentially moving out more towards $101,000 to $118,000, which will be where I think we are likely to see BTC potentially topping out. And I've been through that many times already as to why I believe that we're not going to see anything more than around 120k BTC. Hopefully I'm wrong on that. I would like it to continue surging, but I just cannot see it really doing that. So it'd be interesting to see how it kind of plays out longer term. But yeah, our stochastic is still starting to move up a little bit. But again, this is a weekly time frame, right? Each one of these candles is 1 week. And so to print our stochastic RSI in any kind of meaningful way upwards, it's going to take a lot more. We can still see some volatility here. So I'm still looking for price to move down a little ways, grab as much of the liquidity out of the market before moving up. If we take off the stochastic, throw on the divergence indicator, let's make this a little bit bigger. You can see that it's overbought on the RSI after coming down a little ways here. Again, we've seen many times already in the past how this reacts. It'll be interesting to see whether or not we see continued slippage to the downside here, or whether or not we can now just rally back up again. Obviously, we had a couple of peaks already. We've come down, we've rallied up, we've come back down, and we are of course in lower lows on the RSI here on the weekly time frame. So that's an interesting one. But at the same time as having that, we have got higher highs on this one as well. Okay, so it's possible that we do rally up and we touch the upper area, and I think that's really where the stochastic RSI is lining up to this one as well. So again, not terribly too concerned about that. Volume wise, here is a biggest indication of everything, as you can kind of see how volume is. Let's bring this into context, guys, and bring this down just a little bit. You can see that the volumes are very insignificant on Binance, and it's not just Binance. I mean, Binance is still your biggest platform in the world when it comes to volume. volume for BTC on the USDT pairing, and the volumes are significantly lower, right? And so we want to be very mindful that volumes were much better once we actually got that bottom in November, and then basically March 2023 volumes kind of really died off quite aggressively in terms of spot volumes on BTC via Binance. And the volume profiles are very similar across the board, but when we take a look at exchanges based on their volume, Binance is still top of the list by a very, very healthy amount. So just be very mindful of that. Obviously, the spot ETFs will have their play in this, but again, it's still not really a direct effect because that's really a stock market flow. So what I'm looking for in terms of volumes, I am looking for bullish volumes to come in here, volumes that we kind of saw back in like 2021. I think that's really where we are. We're looking for volume to really start to ramp up, I believe, latter part of this year. So I'm going to be looking for that on the Binance chart for sure. So all in all, yeah, I think we're in an interesting spot for Bitcoin. I am still looking for Bitcoin to kind of pull back a little bit before we kind of have that next surge to the upside. We're looking for getting close towards that 200-day exponential moving average, maybe just come down a little bit more, max pain, grab as much liquidity out of the market, grab all that liquidity. I think it's like $10 billion worth, just around $50,000 with a wick. And then that's going to be a significant buy because if they do get liquidated there, they're forced to buy Bitcoin. So a significant bounce at that point back to the upside. So it'll be very short-lived if we do go down there. Guys, if you found today's video useful, smash the like button. If you are new, subscribe. And if you haven't done so already, check this video out right here where we discuss a bit more about what's going on in the crypto space.